Hey everybody, Dave Bartosiak with Trending Stocks at Zacks.com. Somewhere up in the sky, Hugh Hefner is smiling down on the stock market. The PLBY Group, which touts itself as a leading pleasure and leisure lifestyle company, is back in the hands of investors. Only this time, it's not for the articles. You see, when the NFT or non-fungible tokens fad popped up on the scene, this group took center stage. If the NBA can sell a top shot of a LeBron flop, then certainly Playboy has a few assets it could tokenize. This potential helped the stock run up from the teens in March to over $60 a couple months later, making it Miss May on everyone's calendar. While the stock did reel into the low 40s, it's back in the news again today. Now, the company commenced an underwritten public offering of 4 million shares of common stock, along with a 30-day option to purchase an additional 600,000 shares. With somewhere around 33.8 million shares outstanding before the news, that gives a dilution of about 13%. Now, PLBY shares gapped down to 47 on the open following the news, but have since shot off the bottom to recover a good chunk of that move over 50 bucks. Now let's take a quick look at Zacks.com to see if this is a stock that you should be buying on this dip. So PLBY Group, currently a Zacks rank number 3 hold. Take a look at the style scores here. An F for value, a C for growth, an F for momentum. Gives it that VGM composite score of F. However, if you look at the industry, leisure and recreation, yeah, kind of loose here, right? But still, top 9% of our Zacks industry rank. You can make of that what you choose, but let's take a look at this. This is really where the rubber meets the road, is the sales estimates here. Look at the revenue growth for next year. 20.74% revenue growth. That's pretty solid. And if you look at the EPS side of things, current year consensus estimates call for 10 cents, but next year that's supposed to balloon to 49 cents. That's 390% earnings growth year over year. Definitely a huge move to the upside. Now, typically, I like to take a look at our price consensus and EPS surprise chart on Zacks, but here's the problem. When you have a recent IPO or companies that's recently come public, you don't really get too much data from this, right? So all we can really see here is early on, expectations were much higher, fell down through the floor for 2021. 2022, same thing, kind of started higher, came back lower, but we do have a nice beat last quarter. So not a lot of data to go off. Really, most of this is that potential. Could the NFTs really make this stock rock and roll? That's something for investors to chew on in the future. Every time you share this video, a teenage boy finds a great article under his dad's bed. Subscribe to the YouTube channel, Twitter at Bartosiastics, and check out Zacks.com/promo for this week's promotion on marijuana innovators. I'll see you next time with Trending Stocks. I'm Dave Bartosiak.